So, welcome to Coffee Cafe. This is our fictitious business. So, we are going to be looking at how a small business formulates and how we properly journalize its first months of transactions. Okay. So, right here, I have my scenario on screen. I have my general journal on the left side. I'm on the right side. That has my calendar, chart of accounts, deposits, checks, and things like that. Okay, so that's like one of the things about Excel is it allows you to have a bunch of different forms. Now this isn't the only form that I will be using for this class as I've posted. There's a total of 6 of them. Majority of the time we will be using 4 because one of them is something that we have to do at the end of each week, which is your trial balance and your financial statements. Those don't happen until the very end of the class. But the trial balances happen every week, okay, at the end of every week. So in this context, I mean Coffee Cafe weeks, okay? And we are introduced to 2 new features. So we have the general ledger and the subsidiary ledger. All right, now each one, yesterday I've explained briefly of what each one has. So again, the general ledger, this is where we're going to actually take a look at how we use the general ledger to produce the information that we need, which is to know what our account balances is at all times. All right, and I'm going to teach you some kind of method to keep track of it at real easy. And then last but not least, we have our subsidiary ledger. This is just for today. We're only using 3 today. Tomorrow, we're still going to be using 3. We start progressing and start using more and more worksheets. So the second week, we're going to introduce the inventory worksheet. Okay. So once again, this is a list of everything that is going to be involving with your business. So whether it's your customer, your vendor, your employee, it's all the people that are in here. Okay. Now, once again, here is the scenario and how I'm going to be showing you guys how to journalize this is by going through the scenario, and I'm going to be asking a lot of questions to help you kind of gear yourself to understand how a transaction works. We're going to be using transaction analysis, so all 7 steps. So if the first couple, which is to recognize that a transaction has happened. And then with that, if you guys have your accounting model out, that's what's gonna help you understand how to journalize a lot better, especially if we have the rule where our debits and credits must match. Okay. So here we are. Let's go ahead and dive right into the introduction to Coffee Cafe. So for a second, I'm going to go ahead and open this wider so everyone can see, and then we'll shrink it up after this introduction. So very first thing is Mr. Bob Mason, who is going to be the owner, okay? He decides that he wants to open a small coffee shop, okay, in his local neighborhood, all right? And he gets advice on how to start up a business, all right, and what documents that he needs to have in order to run a business, okay? So again, he does research, and then he has a okay, and he asks you to intern for him, okay, to help him properly keep his books, okay? And to start off, he has $30,000 to invest in his coffee shop, okay? So we're going to be setting up the chart of accounts, okay, and the general journal and the general ledger accounts. Now, once again, I've already provided it for you. All right, I think that's Kim. All right. All right, so here I've already provided you guys everything that you need. So the very first thing that we ask you guys to do is to set up the chart of accounts. So here it is. Every account that you're going to be using in Coffee Cafe is all right here. Okay? Every single account. And it's organized based on account type, right? So you start off with all your assets, okay, on the left, right? And I number coded them. So then we have some kind of unique account number. So in this case, I made them start with the first 10,000 is going to be my assets. The 20,000s are going to be my liabilities. 30,000 is going to be my equity accounts. 40,000 is going to be my expense accounts. Okay. 50,000 is going to be my revenues. I'm sorry, 40,000 is my revenues, 50,000 is my expenses, and then 60,000 is my operating expenses. Okay, I separated cost of goods sold just because it's so massive that I split them up. Okay. So that is how they're split up, and etc. etc. So same thing with your general ledger, right? It is also coded by account type. So down below, it will help you make it easier to locate the account numbers. So as you can see, right, it's organized in the exact same order. Right here, you got your account name and you have the account number. So whatever way that you are able to use Excel to help you locate something. Now, I normally like to just scroll and just locate it that way. There are some techniques that you can do, such as highlight row A and then use your search feature, okay? But in this case, this scenario is very, very tiny. There's not that many accounts if you actually think about it. It's just maybe over 100 accounts here, but it's easy to find and locate. So once again, your chart of accounts has already been established, all right? And you have your general journal and your ledger and your subsidiary ledger, all right? So all of those have been set up. So now let's go ahead and dive right in. So here's a key factor that we do know. We do know that Bob is going to invest $30,000 into his company, okay? So with that being said, okay, that's good key information that you have in mind. So then the 31st of May, which is a Friday, Bob's friend, okay, from the bank, okay, tells him about a small coffee shop business, okay, that's filing for bankruptcy and is currently short selling on the market. So in this case, his friend decided to tell us, hey, there's a shop. Are you interested in it? It's on a perfect street. It's already pre-built, as in it was a previous coffee shop. So there's not much stuff that you really, I mean, obviously, besides renovation, there's, it's already built as a coffee shop. All right. It's designed that way and people like it. And in this case, right, Bob says, okay, so he decides to go to the to actually file to actually purchase this business, okay? So this is what we got from this business, okay? We purchased furniture, okay, that was already there, $4,000 worth. We purchased a coffee brewer that was already there for $1,900. We bought the business name because in this case, right, we already bought a previously owned coffee shop. So we have to buy, and if we're buying it under from them, we're basically buying and taking over. Okay? And so therefore we have the business name. And last but not least, we have a total, oh wait, never mind. We have the total amount for the business is $8,000. Okay? So in this case, right, let's go ahead and take a look. So now let's use transaction analysis. Number one, did a transaction happen? Number 2, does it affect the business in a way that affects a business? Yes.
Yes to both.
Okay. And here, I guess, can we use the debit and credit system, and do we need to properly journalize it in a proper book? So in this case, we only have one book, which is the general journal. Now, here, I purchased a business. Okay. Am I able to journalize this?
The purchase of a business is still considered a transaction, so you should be able to journal it, right?
Okay.
So the answer to your question, yes.
All right. So you think we should journalize it. Now, let's take a look at going back to chapter 4. What is this something that I need to actually have in order for me to record a transaction? Okay. So go ahead.
You need to have a bank account, right?
We need to have a bank account. And right now, do I have a separate bank account for my business?
No.
No. So therefore, yes, a business transaction has happened, but right now, that $30,000 is in Bob Mason's personal bank account. Can I journalize a personal, a business transaction on a personal bank account?
No, you cannot.
No, you cannot. You shouldn't do that. So in this case, I can't journalize this transaction today until I buy a bank account or open up a business bank account. So in this case, I need to hold off to that. But I did buy this business, all right, for $8,000. So then let's see what happened next. So then on June 3rd, Monday, we decide to apply for a DBA name, which is a business license here. So in this case, we applied for a business license. All right. And the court costs for this one, well, in this case, we're trying to change the name. And we changed the name, which cost us $25. All right. Once again, going back to that theory, we don't have a bank account yet. So we need to hold on to this, but what is so unique about this transaction? We only applied for a name change, but it cost us money. So in this case, yes, this is a transaction that has happened, but we don't have a bank account, so we cannot do anything further on. But it's good to keep a mental note that, okay, well, at least I made a name change. I changed it from whatever it was previously to now Coffee Cafe. All right. Okay, so on June 4th, okay, we decided to apply for a Nevada State Business License, which costs $250 to obtain the actual form and submit it. All right, and then we also applied for a city business license as well, which cost an additional $100. So once again, when you do actually apply for a business, right, not only do you need to understand the exact state that you belong into so you can recognize what state taxes you have to do business in, but also the local agencies or the local counties that you are doing your business in, because they have a separate taxing system, but they also want to make sure that when you do the business in that state, that then that business becomes recognized. So you need to apply to both and have permission from both the state and the local city to make sure that you are able to do business. So as you can see here, we applied, right? Business type, we are going to be a sole proprietor, all right? Owner slash owners, right? So since we're a sole proprietor, there's only one owner. So Mr. Bob Mason, okay? Other things that we have here is going to be address and city. So here's my fake address, right? I have it here at South Decatur, Las Vegas, Nevada. There's my fake phone number, okay? And then here is my email, bob@coffeecafe.com. All right, so here I'm submitting to the state and the local agencies that I want to do business as a sole proprietor. All right, and I submitted my application. All right, so once again, this only happened on the 4th. So let's see, this whole entire transaction is something that we had to pay for the actual form and to submit it. Okay. So then that very same day, I decided to open up my business checking account at the Main Bank of Nevada. So then now that I'm opening my main bank in Nevada, here are the list of things that I've spent, but at the same time, this is how much money I have left. All right. So in this case, right, we need to recognize what I've purchased along the way. So in this case, this is now where we can properly journalize our transaction because now we have an official bank account. So very first thing here is, obviously, I'm going to be dumping the rest of my cash into my checking account. All right. Now, in this case, I bought $8,000 worth of business stuff, which was the business name, which is going to be treated as goodwill. All right. Goodwill is an intangible asset that allows you to kind of recognize when you buy a business short sale. And it's it's actually worth more than what you bought it for, that's going to be considered goodwill. In this case, I just purchased it short sale, but I'm purchasing the actual name of the business. So in this case, it was worth $2,100. Okay. And then here we bought a coffee brewer, which is an asset. We bought furniture and we also came across some business license and permit. All right. Now here, let's go ahead and take a look at our chart of accounts to see if those accounts exist before we can even journalize it, right? Because now we recognize that a bunch of business transactions has occurred. Now this one's the very most important one because we opened up a bank account. All right. So we need to record all the business transactions that have already happened because now we're officially starting to record in our books. All right. So now that we went over step 1 and step 2, now step 3 and 4 is to determine what accounts are going to be affected and how we're going to use them. Step 5 is using the debit and credit system. So let's take a look here. So let's take a look. Do I have a checking account?
Yes.
Yes. Check. Okay. Account number 10100. Okay. That's considered an asset because it's money that we have. This is our money. So that should definitely be debited because it's our money. We're increasing my bank account with the remaining money that I have. All right. Second thing is, do I have an account for furniture?
Yes, 1,300.
Yes, 1,300. Right. Good. Do I have an account for a coffee brewer?
Yes, under office equipment and is 15,010.
Okay, so if you actually notice this, right? What are you noticing in your chart of accounts? That there is some kind of text going on that's kind of like that kind of gives you an idea of which account is belonging to what. So if you notice this, my main accounts are going to be in cap letters. My sub accounts are going to be in regular letters. All right, so I noticed this, that 15,000 is equipment, but underneath 15,000 is 15,010, which is my coffee brewer. All right, so there we have that. Good. And let's see, do we have goodwill?
$19,100.
19,100, and then license and permit expense. Do we have that expense account?
Yes, under expenses, operating expenses.
Good, for 6,600. So now let's go ahead, now that we know that we have our accounts, now we're going to go ahead and properly journalize them. Okay? So first things first is I'm going to be recognizing my checking account. Now in this case, order doesn't really matter, but in this case, because I'm telling you how the order should be, as long as you're able to recognize your debits first and then recognize your credit afterwards, okay? So in this case, I'm going to recognize my checking account first, all right? Now, in your description, I'm going to go ahead and let you guys do whatever you need to put in your journal. Just because, for example, any means that helps you to understand why or what is going on, go ahead and use your journal as a means for you to understand what's going on. Now, I put checking. That's fine, but usually the journal should be meant for just your exact account name. All right. Yes, you can abbreviate. Just make sure that when you're doing your books, that you are recognize what that is. So if you want to do, if you want to put abbreviations, you can do so. But just know that, because obviously we're not going to be sharing our books with each other. So if that's the case, again, this is your book. So whatever you feel necessary to shorten up the text or shorten up the workload, it's what you want to do. However, whatever I put in my notes, it doesn't have to be exact as what you want to put in the notes. But I am going to give you some kind of idea of what the note should be, because don't forget, you're not the only one that's looking at your own books. You have your accountants, you have your coworkers, people who are working on the same book as you. They're going to be recognizing and looking at your book. And if you make it in some kind of encryptive way, right, putting a whole bunch of abbreviations, it's going to be a lot more difficult for someone else to understand your work. So, once again, keep in mind, this is your own books and this is for your practice purposes only. However, once again, think about just considering other people, if they are going to be looking into your books. How would you want to represent that? Okay, so for me, I need to be able to represent enough for all of you guys to be able to follow along with me. So in this case, I'm going to go ahead and fully write out everything. I'm not going to use abbreviations. Okay. So again, checking. We recognize that checking was account number 10,100. All right. That is rule of thumb right there, is you need to be able to recognize the account number. Now, once you go ahead and go through the system, you're going to notice this, you're going to memorize checking for sure, because checking is going to be that number one account that you're going to be frequently using. Okay. Now, all right. So then now the next one, okay, is going to be for furniture. Okay. We bought some furniture. In this case, since, I'm going to let you guys know this, in the same day, we're actually going to sell out our furniture since it's not the furniture that we need for my shop, or for Bob Mason's shop. So in this case, we're just going to treat the furniture as just furniture, because at the end of the day, we're going to get rid of it. It's not an exact furniture that we are going to need to label. Like, I'm not going to say I bought a couch, table, and everything. I'm just going to group them all together and say that I purchased $4,000 worth of furniture. So again, furniture was account number
1,300.
1,300. So there you go. 1,300. And because I acquired an asset, I'm increasing my assets. So now that's going to tell me I need to debit my account for 4,000, because now I gained an asset. I acquired an asset.
Is it 13,000 or 1,300?
Where do you see 1,400?
No, the furniture PR.
It's 13,000.
13.
Is it? Or 1,300? I don't know.
13,000.
Okay.
Okay. All right. So in this case, I use a 5-digit coding number. Okay. So once again, now since I acquired my assets, right, I increased my assets for furniture. So therefore, I'm debiting my account. All right. And then last right here. All right. So here, since I've already pre-calculated for you, we are going to be depositing $21,625 into our bank account. Okay. So all of these worksheets and workbooks that I've provided for you, they're not formatted. Some of them are, some of them aren't. Because I'm going to leave it up to you guys to format it in a way that makes sense for you. So if you want everything to be in accounting style, go ahead and do it. If you want everything to be in just comma style, you could do it, right? These are all your books. So if you want to make them in pretty colors, go ahead and do so. All right? Because this is your book. So I'm only teaching you the very, very bland, basic. But if you want to enhance it to make it feel fit for your company, go ahead and do it, because it's your books. Right? All right. Next is going to be I purchased a coffee brewer. So in this case, I purchased a coffee brewer. That is a fixed asset. All right. In this case, what account number was my coffee brewer?
15,010.
Yes, 15010. Okay. Coffee brewer, 15010. And this time I bought the coffee brewer, which was worth 1,900. So I acquired another fixed asset. So I'm increasing my assets by 1,900. All right. Then next here we have Goodwill, which was the business name. Okay. Goodwill. All right. And what account number was Goodwill?
19,100.
19,100. And because this Goodwill is an intangible asset we acquired, therefore, it's going to be another increase on the debit side. Okay. Then we had to deal with a license and permit expense, right? We bought a business license. We had to get permission from the city to do business. And what I'm going to do there too is because part of the license is going to be having your business name, right? Because we didn't put whatever the previous business was. We had to pay to change the name. So in this case, we changed it to Coffee Cafe, which is still going to be considered part of a license cost because right, you're using that to legally run your business. So in this case, I'm going to combine it all. And so $25 from my court cost for changing the name, right? The state cost me $250. The city cost me $100. So in grand total, that to me is going to be $375. Okay? So $375. Now, because we're in Excel, you can do your calculations here as well. If I said $25 for my court cost, plus $250 for my state, plus $100 for my city, therefore I can definitely triple confirm that $375 is correct. Okay? And that's what we're going to be using in our Excel worksheets. Is instead of having to calculate everything one thing at a time, I can show how it can be done. All right. So now this account number, right? What was my business permit expense account? What number was that?
6,600.
6,600. So now I'm going to type it here, 6,600. Right? Once again, it's an expense to the business. So we know that if we incurred an expense, it's always going to be debited. All right? So that is my total debits. Now let's go ahead and sum this up to calculate what my total amount should be, right, in my credits. So I'm going to use my equal sum formula, okay? Or you could click and highlight everything and you should be able to see the auto sum down below. So, so if I click on this and enter, I have a total of $30,000. Now here's what you have to do, because now what account would you credit? In this case, because I'm investing $30,000 to my company, therefore, that is what's going to be my net worth. Right now, my company is worth $30,000. So here, I need to recognize that if I have a company that's valued at $30,000, what is that? What kind of account would that be? All right. What kind of? It would be an equity account, because equity is your net worth. It's what your business is valued at. Okay. I already have the answer on the sheet, but I'm explaining why it is. Right. So once again, here, do we have so what's my owner's equity account?
30,000.
30.
So if it was a loan, it will still be equity, right?
Okay, if you borrowed money, yes. But in terms of this,
No,
equity.
never mind. Just I kind of like, okay, he had the money regardless of where he got it from anyway, so it's owner's equity.
Yes, because this money right here was his own money. He had this, whether he borrowed it from his friends, family, whatever it is. This is the money that he invested into the company. Now there's a slight difference if there was a loan, because if it's a loan, you're just straighting up getting money for yourself.
Okay.
All right.
Thank you.
Okay, so here, right, it's a credit account and it's going to be for owner's equity. All right, and which we know is account number 30,000. So here, because the owner originally invested $30,000 for this company, that's going to be money that you're going to put into the company. But because I'm opening my bank account, I made a bunch of purchases during the year or during the couple days. Now I need to revert back and say that I don't actually have all this money, because I really don't. I already spent $8,000 for just buying the company, and I spent additional $375 to obtain a business license. So in this case, I spent money along the way, and I only have $21,625 left. So now I need to put a description saying what. So in this case, I'm going to say that what this transaction is. So I opened up a bank account, right? Things that you could put in here would be what those costs were. So I could have said city license. I could say open bank account, right? Whatever you feel necessary. In this case, I'm just going to explain because it's pretty straightforward, right? I have a checking account. So here, I'm just going to go ahead and say I had a business license for $100, for $250. $250. City was $100. All right. Court was $25. All right. And then I purchased business for a total of $8,000. Right? And then end my parentheses. So then now that's the end of my description. And this pretty much tells me all the transactions that had happened that before you opened your bank account, is that these are the things that happened. Okay? And there we have it. So that's how we properly journalize our first journal. And we did it in the correct way because we opened up a business bank account. Right? That's the first thing that you need to have, is you need to have a means for you to be able to record your transactions. In this case, a business bank account is necessary. Right? So now that is my first transaction. And this is what I'm going to have you guys do. All right? So now that we properly filled out our journal, the next step is going to be filling out your ledger. Because at the end of the day, what I need to have is a running balance in my bank account to let me know how much money I have at all times. All right? So I'm going to start, I'm going to pull up my ledger account, and we're going to fill in everything exactly what we see in the journal. And that's what you're supposed to do, because that's the fourth step in the accounting cycle, is that once you finish your journal, you're going to post everything to the ledger. All right? So here we are, general ledger over here. Okay? So my first account that I have here, and this is the best recommendation that I want to have you guys follow through, because I want you guys to make sure that you guys don't skip around, because at the end of the Coffee Cafe week, we're going to run a trial balance. And the trial balance is going to be based off of your general ledger. So if you skip an account, that's why you have discrepancies, or that's why when you run your trial balance, your debits and your credits do not match, because you skipped around and you forgot to add in something into the ledger. So this is where most accounting errors happen, is transferring the information from your journal to your ledger. So in this case, I want you to do this. I want you to go through each account and place it in here. So my very first account that I have in my journal is my checking account. So here we go. Once again, they're organized based on account type. So here, my very first one that I should see is my bank, which right under that is going to be my checking account. All right? And exactly how you see it in your journal, you're going to put it into your ledger. So the date here, right? It's June 4th, right? Now the notes that you want to put in here is under, it says item here, but that's what you want to say in regards to what this transaction is. So in this case, I'm going to say this is my opening balance in my bank account. Okay? Opening balance in bank account. And I have the date right there, so I don't need to put the date in there again. Now here, the post reference is going to be what general journal number you put this in. So that way I have a reflection of if in case I have a problem in my ledger, I can look at my post reference saying, okay, this transaction happened on this general journal. So then I can locate that a lot quicker. So in this case, my post reference, right, as we talked about the general journal, at the very top corner, it is page 1. We're on our very first page in our general journal. So what I'm going to do, my post reference is going to be GJ for general journal, page number 1. Okay, this gives me, so then I know that this transaction happened on my very first page in the general journal ledger. A general journal, excuse me. Okay. Now, exactly how I journalized it, right? I debited my account by $21,600 and to $625. Now, in this case, I didn't format this because some people like it accounting style or they like it with the dollar signs. In this case, I like it comma style. So I don't like to use dollar signs because sometimes if you have your work cluttered or your cells not wide enough, you can easily mistake that dollar sign as a 5. All right? It's been done before, so in this case, I like to keep my stuff comma style. Okay? And then now that I have a debit in my column here, now this is where the normal balance is going to actually come into play, right? Because now I need to figure out what my normal balance is. So in this, on this right side here, you have a normal balance on a debit or a credit side. Now in this case, I debited my account. So therefore, if I started at 0 and I add a debit, what's my balance going to be? It's going to be on my debit side because in this case, I'm increasing my checking on the debit side. So therefore, my balance, since I don't have a previous balance, and we'll talk more about creating the running balance in a couple more transactions. In this case, I'm starting here and saying, well, this is going to be my starting point in my normal balance. So in this case, in my checking account, I should have $21,625 in my bank account. All right, boom, and it's on the debit side. Okay, because we're increasing our assets. Okay, so that was our very first one. So the next account that we have here is furniture. So once again, I feel most comfortable to just scroll down and search for it. Furniture shouldn't be that far down anyway. And here we are, furniture. Okay. It is 6/4, right? And what happened here? Well, in this case, I acquired furniture. So in this case, I'm going to write here that I purchased furniture. Okay. All right. Post reference once again, general journal number 1, because that's where the transaction is. And now let's take a look at my journal because whatever I post in my journal should be identical in your ledger. So in this case, I increased my asset or my furniture account with a debit with $4,000. Okay. And I'm going to just format this real quick. All right, $4,000. So if I increase my account with a debit with $4,000. Therefore, my normal balance should start off with a debit balance of $4,000. Okay. Everybody good so far?
Yes.
Okay. So now let's go ahead and continue on. Next is going to be my coffee brewer. All right. So I'm going to go locate that account. It should be under equipment. So office equipment, here we are, equipment. Now I'm not going to put it under the main account because I used the specific account. So in this case, I'm going to skip over the main account here for my equipment and go straight into my actual coffee brewer account. Okay, so there we go, coffee brewer. Now, I'm going to give you guys a heads up because in this case, we're going to run a business. One coffee brewer is not going to be good enough. All right. So in this case, we will be making a future purchase. So how I'm going to refer this one is that I'm going to say, this is coffee brewer number 1. You could say purchase if you want. Purchased coffee brewer number 1. Okay, so that one's my very first coffee brewer. Okay. All right, if you need to extend for any reason, you can do so. I mean, again, these are your worksheets. However, you're able to view everything at one time. Okay, is however you want to do it. Post reference, once again, general journal number 1. And we purchased this coffee brewer for $1,900. Okay? So therefore, we increased our asset by $1,900. Okay? All right. Then we purchased the business name. Okay, so Goodwill is right here. Okay. 6-4, and I'm going to go ahead and write purchased business name. All right. General journal number 1. And I purchased this for a total of $2,100. Just like how I see it in my journal is going to be how I'm posting it into my ledger. Okay? And because I debited my account, therefore my balance is going to start off with a debit balance of $2,100. Okay? All right. Now, let me see. The last debit that I have in my account is going to be a license and permit expense. So now we're going to go down below to my tabs, and I'm going to go ahead and locate my operating expenses. Okay, here it is. Expenses OP for operating. All right. Most cases, a lot of your expenses are going to be in alphabetical order. So in this case, I'm looking for my license and permit expense. Here it is. License and permit expense, account number 6600. Okay. So there we are. It is now 6-4. And now I'm going to write in my notes that the state, or in this case, I'm going to do NV license cost me $250. All right. City license cost me 100. And then court cost to change name cost me $25. Okay? However descriptive you want to be, you could choose to be so. You could do whatever as much as you want. But in this case, you didn't want to put a note, you don't have to. In this case, I want to make sure that I understand what the breakdown is for the $375. Because if I just lump them up together and someone asked me how much was the city cost, I would have to go back to my receipts, pick up that receipt, and then be able to tell them. In this case, I write and break down my information in my little notes to myself saying, well, the city cost me $100. Okay. Post reference.
Separate them.
Say that again?
Can you separate them?
You can. You can if you want to, but at the end of the day, they're all going into the same account.
Okay.
Okay. In this case, I want to save some journal space, and I also want to save just space in general. So all of these were purchased, right? Even though they were purchased separately, they all fall under the same category or the same account. So you can technically do it. It's just that, remember, if you journalized it as one account, you definitely want to make sure you save some extra space here. You know what I mean? But you're just going to have to add a bunch of extra lines here. But I like to keep my stuff concise and clean. So I just put them all in one line here. Okay. General journal number 1. Okay. And we debit the account for $375, which then, once again, the beginning balance is going to be on the debit side for $350. Okay. All right. So then, last but not least, we have to go to our equity account. So here we are, equity. At the very top one is your owner's equity account, and we're going to put it in exactly how we see it in our journal. This time, I'm going to say original investment, because that's what he originally invested into the company. Post reference, general journal number 1. He dedicated $30,000 into this account. Now, this is where you have to be very careful. Whatever you see in your journal, you need to transfer the information exactly. So in this case, I'm no longer going to be debiting my account. I'm crediting my account for $30,000. All right? Therefore, my normal balance for my equity account is going to be credited. So, all right, make sure you are aware, because this is also where a lot of mistakes happen right here, because some people they forget that they're dealing with debits and credits, so they just put it in whatever column that makes sense for them. In this case, you have to be very careful and specifically put them in each account properly, in their debits or in their credit column. Okay? So in this case, I credited my account because that's how equity works, right? It normally is increased with a credit. So there you go. I have $30,000 on the credit side, which gives me a running balance of $30,000. Okay. All right. And that's it. And that's what I want you guys to do for the rest of the scenarios. Okay. After you journalize, I want you guys to post it into your ledger because I need to know what the running balance is in my checking account or in all of my accounts. All right. And this is where it's going to minimize any errors for when you do your trial balance. Because if you wait till the very end to post everything to your ledger, that's where it's a tedious task and you could forget, or you see an account that appears first, you put that in there and then you forget to go back to that one. All right. Many situations can happen, and this is the best preventative measure right here, is that once you journalize it, all right, I'm going to go through each and every single account and drop it into my general ledger. Okay. So now that I completed the last thing here, that is it. I am completely done with my general ledger. Okay. So then now, going back to my scenario. Okay, any questions so far?
No.
Okay. So that was my very, very, very first transaction. So then let's go ahead and see what has happened next. Right here, what did we do?
You apply for a line of credit.
Okay, we applied for a line of credit. Do we need to journalize this?
No.
No. Why?
Just applying doesn't really affect the business at all.
Correct. Second thing is there's no cash value or a transaction that actually happened, right? All you did was apply. We didn't tell you what amount you got approved for. We didn't say what you got. You didn't spend anything to apply for a line of credit. So in this case, that's something you definitely want to keep in mind because we applied for a line of credit. Okay. Right. So then, same day, Tuesday, June 4th. Now this time, we actually got rid of our furniture, right? We sold our furniture for $2,000, okay, cash, and request a new account ledger to record the loss. So in this case, right, how much is my furniture actually worth?
4,000.
It's worth $4,000, but I only got $2,000 cash out of it. So where did that extra $2,000 actually go?
Isn't that a loss?
It is a loss because we purchased furniture, right, and we sold it for less.
Is the depreciation cost, right?
Say that again.
Depreciation, right?
It's not necessarily depreciation, because once again, that's a little further into it. But in this case, it's not technically depreciation, really. It's just that because we couldn't, because when we bought it, we never used it. Because the day that we bought it, we never used it. We sold it right away. So in this case, right, it didn't lose any value because you didn't use it. However, it's just that's just how it is if it's purchased from somewhere else, or you're trying to sell it out to someone else. People are not going to pay for the full price for it. So in this case, they haggled with you and you're able to get at least $2,000. That's better than nothing. Okay? So in this case, you just end up short selling, or you end up selling the furniture for less. Okay? So therefore, yes, you did end up taking a loss. Now in this case, right, I'm going to treat this loss as a miscellaneous expense, all right? A miscellaneous expense account is just a random account because I don't know what to do with the loss just yet, all right? I'm not ready to record it as a loss to the company just yet. So in this case, I created a fictitious account just to represent the loss on the asset until we for surely have a proper account for it. So in this case, you guys, because you guys are the bookkeeper, right? You're going to request me to create an account for the loss. So in this case, there it is. I'm just going to throw it in there as a miscellaneous suspense. Okay? So in this case, right, I received money. Okay? Now in this case, right, what am I going to do with the money? It's cash, right? I received cash.
You just put it back to the business account.
We're going to put it right back into the business account. Okay? So, right, we know what checking is. If you just look right above, checking is 10-100. Okay? Checking is account number 10-100. Okay? I have an unfamiliar account name called miscellaneous suspense. Let's go ahead and use my chart of accounts and find out what account number that is. 19,990. Okay? It's going to be the very last account in your chart of accounts for the assets. Okay? So miscellaneous for 1990. Okay? So in this case, right? How much cash did I receive? $2,000. In this case, I'm getting rid of all of my furniture. I took a loss for $2,000. Okay? Now, because I'm selling my furniture, I'm essentially decreasing or getting rid of my furniture. Therefore, I need to credit my account because I'm getting rid of my assets. I'm losing my asset. I'm giving it away, or in this case, I sold it. So therefore, I need to credit my furniture account. Okay. Now, why is it that I have to? Why is it that I originally have to take it out for a total of $4,000? Why is that I have to take it out for $4,000?
Because that's what you pay for.
That's what we paid it for, right? That's our historical cost value. All right? And now that I'm finally getting rid of my asset, this is where I determine whether I gained money from it or whether I lost money from it. In this case, I definitely lost money out of it because I'm getting rid of all of my assets, right? If I just only took $2,000, right? What does my account really reflect if I have $2,000 left? Right? In this case, I'm getting rid of everything that's in my furniture account. So we'll talk about that when we dive into the ledger. It will make more clear sense. Because in this case, I got rid of all $4,000 worth of my assets. I didn't get rid of just $2,000. I'm getting rid of all of it. And it just so happens that how much I purchased it for was for $4,000. So this is where the historical cost principle is going to come into play because I can't say I sold $2,000 worth of it. No. I'm getting rid of everything. So in this case, I'm not decreasing my account by $2,000. I have to decrease my whole entire account by $4,000 because I got rid of everything I purchased originally. But I only got $2,000 out from that sale. So in this case, I need to recognize my loss, which is why I created the miscellaneous suspense account. Okay? So then, there we go. Now here, a better way to do it, instead of typing in 4,000, is to actually add your cells together. Because in this case, that will triple confirm that you didn't make any typos, That's number one. And two, that your debits and credits equal on both sides. Okay? That's why in the very first one, I did an equal sum. Okay? This is how you can filter out your mistakes because, again, a lot of the accounting mistakes are due to fat fingering. Okay? Because they type in a wrong number and they don't check this one thing that you have to check all the time. Does your debits match your credits? And if they do, then your journal is good. So in this case, I added my two cells together. So in this case, 2,000 plus 2,000 gives me an accurate amount of 4,000 on the credit side. Right? And last but not least, my description is going to be sold furniture. Okay? And then you can recognize loss $2,000 due to sale. Okay? That should be good enough. And here, of course, I've wrote a different description, but that's, again, whatever you want to do. Okay, loss on sale of furniture. Actually, that's a little better wording, but in this case, I'm being more specific about it. Okay. So now that we have this, right, let's go ahead and put it into the ledger. And then there's another thing that we have to do. Yes?
Question. Can you teach me about how you did the equal sum in there? So you do equal, and then you do highlight the first 2,000 and the second 2,000, and then you just do auto sum, or
In
you
this,
just do
okay, so formula, you just go equal to activate your formula. You can use sum, but in this case, I just added them. I just clicked on the cells and just added them. So you do equal sum. You need to activate it by hitting that tab. Okay? And then you're going to click and drag. Right? And then enter.
Okay, thank you.
Right? In this case, I just clicked on the cell and just added them two together. So equal, click, plus click, equal, and enter.
Awesome,
Right?
thank you.
Okay. So there you go. So now that we finally finished my journal, now I need to post it to my ledger, and then we're going to talk about deposits in a second, okay? So let's post this amount in my ledger, okay? So first thing I see here is my checking account. So I'm not in my checking account, so I got to go to assets. And in this case, I know my checking account is all the way at the top of my assets workbook. So here we are. Now in this case, I'm now saying that my bank account is increased because I sold furniture. But did I actually make a deposit? In this case, no, I didn't. So how in the world is my checking account going to reflect this amount? That's where, after we do this, we're going to go ahead and complete our deposits. Okay? So, again, general journal, number 1, because that's where the transaction was there. And since we increased, because we gained $2,000, now I'm going to go ahead and write 2,000 here. Okay? Now, this is where you guys are going to need to know this formula. All right? So, we're going to start off in our debit column here, right? Now, how we do this formula so we can create a running balance is, okay, so if we're going to start off with our equal. You're going to go with the previous balance that you had earlier. So in this case, I started out with $21,625. Okay? I'm going to add any debits on the left, right? And I'm going to subtract any credits on the left. Okay? So then when I press enter, it's going to automatically calculate to me that I've increased my account by $2,000. So now I have a grand total of $23,625. Okay? So once again, if you are thinking of direction-wise, you're going to go up 1, okay, plus left 2, minus left 1. Enter. Okay? So then every time I enter something in here, so whether I, so in this case, this is I deposited $2,000. So let's say I got rid of that, right? And let's say I wrote a check for $1,500. It's going to automatically subtract that out from my bank account because I said credits decrease this account. So in this case, as you can see, right, it went from 21 to 20,000 because I placed this on the credit side. Now I'm going to undo that because that's not what happened here. I deposited $2,000 into my bank account, and now my running balance in my checking account should be $23,625.
Why did we just add that $2,000, then subtract $2,000? Why we just didn't add the 2,000? What's the point of going that long way? The math is gonna end up being the same anyway. So what was the point?
Because what I'm doing is I'm preventing you guys so then you don't have to do this formula over and over and over again. Because this, if I have that, having to add the debits and subtract the credits, I can drop this formula all the way down and check it out. So the next time I enter something in here, so let's say the next thing I do, I wrote a check for $5,000 for $500, it automatically calculates it for me.
Exactly. But when okay, so we purchased the furniture for $4,000. Then we turned around, and so we're over here. We sold it for $2,000. But the formula you just did, either way it goes, if you had just added the $2,000 to the 21,625, it still would have came up 23,625 without subtracting the other $2,000. You understand what I'm saying? That's like a long way to go around to simple math.
Okay, yes, but here, so here, if I'm going to do exactly what you just said to me, okay? If I just, okay, hold on. Let me clear this all out. Okay, I'm just going to have to, okay, so edit, undo. Okay, so I'm going to do exactly what you said right here, okay? Why is it not undoing? Okay, I'm just going to... Okay, so if I didn't have this formula, right, and you just said just go ahead and just add them together like that, right?
Right.
So if I drag this formula all the way down, okay, just hypotheticals, right? And let's say I wrote a check out for $1,500, and I put it on the credit side, right?
Yeah.
Nothing's happening. Then I would have to go back into this formula, go up here, and manually subtract it out here to finally get my running balance. But now because I have this here and I put in another debit in here or a credit in here, right? Let's say I wrote another check for $500. I have to consistently go back and fix my formula.
Oh, so for the simplicity of being able to add any additional numbers on the credit side, you're taking it through the Excel formula. Okay.
Correct. So
because other than that, I wasn't understanding why we're going back and forth with the simple math. But for Excel, you need that formula.
Yes. So in this case, it just makes it easier so that you don't have to enter the formula over and over again. I can just copy that formula all the way down. And that way, every time I add something or debit something or every time I credit something, the formula is going to automatically recalculate. And that's why I really encourage you to use Excel because, once again, it calculates it a lot more easier and a lot more quicker than having to punch in the calculator because we can also make a double error by punching the wrong numbers in the calculator and then punching the wrong number into our Excel. So, again, this is just to lessen human error in another way. So in this case, that's just making it more easier to again enter in data and having it to automatically calculate for us to lessen our mistakes of calculating. Okay, so there you go. So once again, that formula, we're going to practice this formula throughout all of our accounts here in the general ledger. Okay, so once again, it's going to be your previous balance amount. Okay, you're going to add any debits in this row, so 2,000, and I'm going to subtract out any credit, which in this case my credit is 0 in the same row, and I'm going to press enter, and it's going to reflect that I have 23,625. And what I can do here is I can now drag that formula down, all right, to help me calculate as I go. All right. Let's go ahead and finish up the rest of the account. So now I have a miscellaneous suspense account. Okay. Like I said, I recommend you to try to do it in order by the journal first. But if once you get used to this system and you think that you are able to make sure that you can go through each account with no problem, then you can go ahead and freely do what you need to do, right? And I'll give you that opportunity to do it in the week 3 and week 4 of Coffee Cafe. But for now, as a preventative measure, go ahead and just continue on using my method where you're going to enter in each account so you don't forget an account and end up, not recording a transaction. So in this case, I'm going to go straight to my miscellaneous suspense account, which is at the very bottom of my asset worksheet. So here we are, miscellaneous suspense. It is now 6/4, and I'm going to say loss due to disposal of furniture. Okay, you could use disposal, you could say because you sold it and you lost it, whatever way that makes sense to you, right? The items or the notes here are whatever you want to place in here. Okay. General journal number 1, because we're still on the first page. And this time, I'm going to debit my account for $2,000. Okay? So therefore, my beginning balance or my normal balance is going to reflect that $2,000 because it's my first number that I have there. Okay? All right, $2,000. Okay. So then let's see, now then we need to go up to our furniture account to go ahead and credit that furniture account. So I'll go up to furniture. So I missed it. It's actually right here underneath inventory. There you go. My furniture account is right here. Okay, so furniture. So this time I sold my furniture. So I'm going to go ahead and make that note right there. I sold the furniture. And this is general journal number 1, right? And this time, I got rid of everything. So this is what I mean by using the historical cost value, because in this case, right, if I got rid of everything, Therefore, I should have nothing in my furniture account. But because I only gained $2,000 worth, this is exactly why we need to journalize it this way, because I can't say I only got rid of $2,000. I got rid of everything in my books. Because if I wrote that I got rid of $2,000, right, and I run that formula, I'll go ahead and go repeat that. And my book says that you still have $2,000 worth of furniture in your account. But in our reality, no, we got rid of all 4,000. So in this case, that is exactly why we must use the historical cost value. And because we sold it for under, that's where we recognize our loss. So once again, I sold everything. So once again, that formula is going to be your previous account or your previous balance plus any debits minus any credits. And that should give you 0. So in this case, I completely got rid of my furniture. All right.
Can you repeat that again?
The formula?
Yes, ma'am.
Okay, so you're going to go equal up 1, okay, plus left 2 minus left 1. Right? And enter.
Thank you.
Okay? So once again, that's taking your previous balance, right? You're going to add any debits, in this case there's nothing there, and subtract any credits, which is the 4,000. So therefore, my balance should become 0. Now again, this could be where you could take your shortcut and just say where you could just take the 4,000, subtract the 4,000, because as you can see, there's nothing else that we're going to do with this furniture account. It's more so for the accounts that have longer cells, obviously. For the checking account, you definitely need it for that one, because we're going to be using almost the entire cells for the checking account. Okay. So last, before we go on break, now our checking account, right? It's saying that we have $23,000 in our checking account. But in reality, do we really have that? No, we have to go physically to our bank and actually deposit it. So that's where I'm going to go ahead and have you guys do this, because this is for practice purposes only, especially when you're using QuickBooks, because QuickBooks does the same thing too. If you're receiving cash or you're receiving checks, does that mean it's in your bank account automatically? No. You have to go and physically take it to the bank and deposit it in there. All right? So in this case, right, you were supposed to put your first deposit for the 21,000, so 21,625. In this case, I skipped it just because this is your bank account. That's you don't need to add, this isn't extra money that you're putting in your bank account. So I'm just going to ignore that very first deposit already, because that is something that you put in the bank account. That's your starting balance. Okay? So in this case, I'm going to say that I received now $2,000. So this is right here on the left side, your receipts column. This is what the money that you're going to be holding on to. Okay? But because I deposited, so then my bank account shows that I have $23,000, that's where I'm going to say, well, normally you wouldn't go to the bank every single time you receive some kind of cash, right? Because then that makes more work for you to do, and it's unnecessary. You could do it at the end of the day, or you could do it at the end of the week, at the end of the month, however you feel necessary to put money in your bank. But in this case, we're a brand spanking new company. You should put every single penny in your bank account at least by the end of the day, because once again, you need every dollar that you need right now in order for you to operate your business, because you can't afford to be holding on a whole bunch of money, right? And your bank account, and you keep spending from your bank account. At the end of the day, you're going to end up overcharging your bank account. So best rule of thumb is we generally should make your deposits at the end of the day. So in this case, it is June 4th, and I'll let you know that is the last transaction for that day. So therefore, I'm going to go ahead and make that deposit for the $2,000. Okay. So once again, this column here is for you to collect all your cash and all your checks, whatever it is, right? And then when you finally reach the end of the day, then you go ahead and deposit all of it at once. So in this case, I'll give you a little hint in the future. Yes, you will see that we will be collecting about 2 checks and a lump sum of money. And what we're going to do is we're going to transfer that entire amount into our bank account because that's when we're going to deposit it. Okay, so it's very similar. QuickBooks has a little feature on there where it allows you to do the same thing. You're going to be collecting sales, you're going to be collecting checks, and then when you reach the end of the day, you're going to end up depositing them all at once. Okay, so there we have it. All right, any questions here?
No.
Okay. So once again, that was the last transaction of that day. So I felt that you do need to go deposit that money in the bank. Okay. So I'm gonna stop here, and what we're gonna do is we will continue the rest of the scenario after break. So right now it is 10:10. So go ahead and take your nice 20-minute break, and please be back no later than 10:30.